Hey guys, welcome to Realistic Crypto. I'm Mark, and in this video, we are going to take a look at the out of the box 3Commas Gordon bots. And specifically, we're going to look at, are these bots profitable? How do they work? Um, and should you run them? So, without further ado, let's get straight into it. So, if you are new or if you've been around 3Commas at all, you'll know that they have some built-in DCA bots. Now, you can create these by um, going into 3Commas, opening DCA bots, clicking on create a DCA bot, and you are presented with three options. Now, you have an option to be conservative, an option to be moderate, and an option to be aggressive. Goes from safe and slow all the way through to riskier and fast. Now, I've been running one of these bots, each of these bots, um, and I've allocated $5,000 to each of these bots through a paper trading account to see how they perform over a period of time. Now, we've had these running for around 80 days, um, and the results are quite interesting. So, I guess getting back to the screen very quickly, if you wanted to create one of these, you can choose the option. Let's go aggressive, riskier, and fast. And let's give that 10% of the funds. You hit the create bot button and you are done. Now you can choose to start it or you can hit the close button. And what that will do is that will have created the bot. No other interaction needed. It chooses the pairs, it chooses the settings, and it chooses the deal start conditions. Out of that 10% of funds you allocated, it splits it out into base order and safety order sizes, and you need to do nothing else. It is running, you can leave it, deals will open. But the interesting point and what we want to get to in this video is, are they profitable? So I guess first of all, let's talk very quickly about what they do. So each of these bots uses a deal start condition called QFL, and that stands for quick fingers look. Now, this is a strategy that that came about a number of years ago by another content creator called Quick Fingers Look. And 3Commas have used it as their deal start conditions for their Gordon bots since they brought them to the product. So, looking down this list, what it's looking for is price support levels called bases. We'll look at a couple in a minute. With the possibility of finding dead cat bouncers, we'll talk about that in a minute too. And there's a number of options. So original, day trading, conservative trader, and position trader, and each one uses a different candle condition. Now, there's also a number. So if we were to head back here, there's a number here. What that means is a percentage drop under that base. So it finds a base of support. When it drops number under that support in terms of percentage, that's when it looks to open a deal. Now, what does all of that really mean? Well, I guess I'm not going to go into it in all of the detail. Interestingly, there is a document with information about the strategy that is 24 pages long. So a good bedtime read for people. But there is also a YouTube channel where Quick Fingers Look takes you through the theory, through the idea, and through the strategy. So it's well worth checking out. It does take a little bit of time to get to grips with the theory, but it's definitely an interesting topic and definitely something to dig into a little deeper. But I guess going back to a dead cat bounce, so what is it? Well, it's a bounce. It's a short-lived bounce in the market when when an asset is in a decline. So, and here's highlighted point. Frequently, downward trends are interrupted by brief periods of recovery or small rallies when prices temporarily rise. So if we were to take a look at this, we've got this downward trend, the dead cat bounce is here, and then we've got a continuation of that downward trend. Now, what we're looking for in here for this strategy is we're looking for where a base gets formed. And now think of that as a support level, right? We've got price comes down, it comes down here, and even here, it comes down here, finds some support here, we get this candle down, and as soon as we've broken 3% below, it's looking to open along in the hopes of capturing that rally back up to the upside. Now, if you think about a dollar cost averaging strategy, you would continue to buy in more quantities coming down here. We see another base, we see that gets broken, we'd get another deal open, and we'd be adding funds down here. Now, what we'd want to see is that if our initial buy is at this candle close, and we'll look at some better images in a minute, some real examples on Ethereum. But the idea is that if we've opened a trade here and we've dollar cost averaged into it here, we want to try and take some profit out and close out that deal up here when we see that bounce. So that's the theory behind the strategy. So if we just jump to Ethereum very quickly, now there are some QFL strategies out there that you can add as indicators to your trading view charts. But what you'll see is a couple of examples. So if we look here, what we've identified here, these red lines are bases. Now it comes down, it creates this support, comes back up, it breaks this support. Now where it breaks this support, what we're looking for is a candle close under that of 3% or over. When that candle closes, we're going to enter here on a long in the hopes that we'll pull back up to this support and get that dead cat bounce before that continuation back to the downside. Now, here, as an example, if we'd have entered here and we had a DCA bot running and we were buying back in and buying back in and buying back in as we were heading down, as we got this dead cat bounce here, the idea is that within this move back to the upside, we'd have taken profits in there. Now, interestingly, you see this. You see this here. So we come down. We've got this support. We break it, and we enter on this. We enter on this candle close here, or this candle open, if you like. So soon as that new candle gets printed, we take an open position, and from there we get this 4% increase. So the idea is that we'll take the profit out up there. If this didn't happen here and we continue down to the downside, we'd continue to dollar cost average in until we get the next bounce, with the hope that our entry price is below the bounce and we take the profits out on the bounce. So that's the theory behind the QFL strategy on 3Commas and how the Gordon bots work. Now, I guess next thing is to look at the profitability of these bots. So it's interesting. So here we have the moderate bot, right? This is the middle one, down the middle of the line. No changes made, all exactly as it comes out of the box. So this has been running for around 80 days and it's made a profit of $981 on $5,000. So 20%, 80 days, pretty good. As you can see, some heavy days with with some stop losses, and two particular cryptos that have caused some pain. Now, if we look at how that's currently looking, we had $2,200 worth of stop losses and $3,180 worth of profits. They are running a 25% stop loss on the position, with 3 safety orders, and we can look very quickly at the table in a minute of how it averages in on this bot. But right now we do have an open trade, and that open trade is negative $533.19 on Storage. So, that could quite quickly reduce that amount. And we can go take a look at the deals as well in a minute. If I hit the edit button, we can't look at the tables and the graphs because it doesn't let you with the Gordon bots. So let's just go back here. So we can't look at the tables of how much additional safety orders and how big those safety orders get, because they are the out of the box bots. Now, what I can probably do is tag something towards the end of this video where I manually replicate those figures. So we'll look to do that for each of these bots. So moving on, that's the moderate bot. That's the one that's the middle of the line. Let's take a look at the second best bot. And the second best bot is the fast bot. Now, I say second best, but this has been a loser so far. So what we've seen is these huge drops, but we're currently negative $800 in that bot. So out of our $5,000, we've lost 800. Now, again, similar tokens, I believe, to the moderate bot. We are running these side by side, but we've stop loss on nearly $5,000 worth of losses, but we've completed $4,100 worth of profits. However, we do have a bot that's negative $828 currently, and that is CFX. So again, not great. Now, this is the surprising one. You would like to think that a safe bot would be safe or safer than moderate and aggressive. However, what we found here is that the safe bot is actually the worst performer. Now, that's currently minus $2,012 down on $5,000. That's huge. Now, let's just have a quick look at what's left. So there's still a negative $604 trade open on Flow. And again, we've hit stop loss to $4,634, and we've completed profits of $2,622, and we've still got the negative $604 deal. So if we get another stop loss here, then we are substantially worse off than where we could have been. Now, if we take a look at all of these together, we ran all of these side by side. We ran them all at the same time over the last 80 days. And, we can see we were up $2,000. We took some stop losses. We came up 2,200. All looked to be going relatively well. And then we kind of hit this August the 7th onwards time frame, which interestingly I saw some dips in the bots that I were running at this time. Of clearly market conditions played a part, and we took that $2,239 profit, and we're now at a minus $301 loss, pretty much in 2 days. Now, it looked like we'd start to see that upward trend again, but then same thing, overnight, pretty much a $1,100 loss, and then we started to make the money back again, and we took the losses again. So all in all, at the worst, those 3 bots on $15,000 were down $2,530. Now we are starting to see that recovery, but we will continue to run these. We'll continue to run these for the next, 6 months, and let's see how they perform. Now, what we can do is very quickly take a look at the monthly ROIs. It only takes into account the last 30 days. So as soon as we start to see a loss on these are going to go into the negative very, very quickly. But if we drill down into the moderate bot to start with, we can see some of those heavy losses, and we're only making 1, maybe 2 deals per day in some of those instances, but there's obviously a lot of capital allocated to those bots. Now, there's a couple of things that I would do to make this better. Now, you can't amend the Gordon bots, right? So you cannot edit them, as we've just seen earlier in this video. But what you can do is you can create them, not start them, replicate the settings, and look at what pairs you want to trade. Now, this by default includes all 324 pairs on Binance. So these in the paper trading bot, they only use Binance pairs. I would be looking to restrict this. I wouldn't be looking to run this on anything above the top 50, maybe the top 100. Because if we go back and we look very quickly at, some of the tokens, ACA and Torn, I mean, I don't know every single cryptocurrency, but if we were to take a look at ACA, bear with me 1 second, is 252nd, that's Akala. And if we look at Torn, 908th. Now, those are the two that caused the real problem in the moderate bot. So again, something that would make this better is reducing the amount of pairs, so that you're not in a position where you're trading pairs that have high amounts of volatility one way or the other. I'd also look to put timeout on these and potentially look to remove the stop losses. The biggest challenge for me using this method and using the QFL method is the ability to backtest with all of the 3Commas settings that you want to use. So you'll know from some of my previous videos that I like to use the RSI 7. It's very easy to backtest. There's backtesters available on TradingView, and you can get a really good feel for how those bots have performed over a period of time. Whereas there's not the same indicator strategies on TradingView that allow you to do the same with QFL that are freely available. So, I think if you were looking to use this type of strategy, my pointers would be to, look to reduce the pairs. Only look to be looking at pairs in the top 50, top 100, and that should reduce the losses on this bot. Again, not financial advice. It's not my favoured strategy, but I did think that it'd be worthwhile bringing a review of these bots so that you people that are new, or maybe not even new but considering wanting to use these built-in features, at least you can take some time and take a look at what they do, and b, the performance over the last 80 days. So that's it for this video. What I will do is, just after this, I'll look to add in a table for how the safety orders look in terms of size. That covers everything that I wanted to get across in this video. So, last thing from me, if you enjoy the content, please like the video, please subscribe to the channel. It does help massively. There's lots more content coming. And yeah, that's it from me for this video. So thank you everyone, and goodbye.